Hello everyone, this is Tony and today we are diving into trading once again, but not too deep. I will show you what lies on the surface, the basics of technical analysis that will help you feel more confident in trading without taking years to learn. I communicate a lot with my subscribers and understand that trading is not your main activity. That is why you are here. You are learning, you need fundamental knowledge, and you never seem to have enough time because you are busy with something else. You need a solid foundation to stand on so you can grow and develop. That foundation is what I provide here. And in this video, I will show you how to analyze the chart using one indicator and basic technical analysis. By the way, I have created something useful for you, my open trading group in Telegram. Click the link in the description. Join the group. You will also find a lot of other useful information there. And of course, keep watching these videos because it is going to be extremely valuable for you. Today we will use 30-second candles with 2-minute expiration time. We will use the Stochastic Oscillator with standard settings, which you can enable from this menu. And of course, we will rely on what the chart is showing us. Using only indicators is not the best approach. It is always important to look at multiple signals and only enter a trade when they align. Currency pair Euro to Japanese Yen. We will look for something with a high probability. Here selling looks like a good idea. First, we are very high on the chart, somewhere around 93 to 94% on our indicator. We are also in a downtrend near the upper boundary of the channel. If we draw two trend lines to make it clearer, we can see it more precisely. This line could be drawn slightly lower, but it is more correct to extend it beyond the boundaries. In this downward trend, which moves within this area, we are now hitting the upper trend line. So, based on this chart, we can predict that the stochastic will start moving lower and bounce off this zone. I did not wait for a direct crossover of this line and entered the sell trade immediately. And as we can see, it is performing well. When trading with trends, it is always better to use technical tools to draw trend lines and enter trades from the upper points of the trend. As long as there are no reversal signals, that means we are trading with the trend. We should never enter from the lower point. If we see a descending triangle forming with movements up and down, we should always enter from the upper point. For reversals, we enter from the lower point, but those are trickier because signals may appear later. I think you got the idea. Now, let's get ready for our next trade. We could wait for the price to drop into this range, but we will not wait. Currency pair Euro to Swiss franc. There is a zone here that we will not break due to the strong impulse of the green candle. Since there was no correction, we would not have broken higher. We entered a trade here for 2 minutes to give ourselves enough time in case the chart moved slightly higher. When we see such strong, tall green candles, we will also see equally strong red candles moving downward. This logic turned out to be correct. That means we once again anticipated the indicator. Just like in the first trade, simply by understanding how the market behaves and how it typically moves, this comes from experience and observation. It is always important to remember that indicators tend to lag slightly. If there is an opportunity to anticipate an indicator, if we recognize a familiar pattern and can predict what is likely to happen next, we can enter a trade based on that. Currency pair Euro to US dollar. A setup is starting to form here. We see that we are leaving the overbought zone. This currency pair does not stay in this zone for long, so I believe we will also exit this overbought level of 92% now. We also see a zone that we are unlikely to break through. Let's mark it like this. We are already approaching this level, so selling here makes sense. We should return to retest this level, and only after coming back to this support zone might we be able to break through it. At least that is how the market typically behaves. Notice how we stayed in the overbought zone for quite some time earlier? After that, we dropped sharply and released that potential. Now, we have returned to the overbought zone, but for a shorter time. Again, we dropped, spent even less time in the oversold zone, and then came back. It looks like we are not remaining here for too long. For example, 10 candles, I guess. That is not how the market behaves. So considering all these factors, we are selling. And so far, everything looks like my reasoning is correct. Most likely, we will move downward from here toward the support level, test with 3 candles, then return and attempt to break the zone, up to the upper boundary of resistance zone. That is how the market moves, in patterns. I believe this is what will happen. As you can see, everything happened exactly as I said. 3 red candles, a retest, and the chart bounced off the support zone, precisely where I marked it. That is it for this trade. Now, we move on to find another signal. Currency pair Euro to US dollar OTC. The stochastic is giving us a strong signal here. Just missed it while double checking everything. A matter of seconds. And the candle has already shot up. We will not enter a trade on a candle like this. Currency pair Australian dollar to Swiss franc. This is a similar setup. We have traded this before. Let me explain again. In any case, we have already entered the trade, so there is time to calmly explain my reasoning behind this decision. A downtrend is forming. It looks like a parallel channel. It could be slightly lower or slightly higher, but that is not too important. We are moving downward and the stochastic shows a good moment to enter a trade. Earlier, we could have entered trades in the same way. When we drop below this trend line, an oversold zone forms and a signal appears. Now, we have dropped again. This time, the stochastic moved downward more gradually, but in the end, the line crossed into the oversold level, generating a signal. At the same time, the chart touched the lower boundary of the channel once again. Later, we will have another opportunity to open a trade, but this time for a sell. And so the cycle continues, following the stochastic and the support and resistance zones. Not all patterns are identical, but a high percentage of them repeat, making it possible to use this approach and confidently enter trades. In all videos I have recorded, the same things keep repeating, and we keep entering the same types of trades. It's not that difficult to understand. And here it is. Take note. We will most likely break this trend line and with around 80% probability move downward again. I think I've explained this strategy enough detail. But let's go over it once more. I want to be 100% sure that everything is clear to you. Leave a comment to let me know if my explanations are clear. I value your feedback. And if everything makes sense, leave a like. If not, leave a dislike. Why not? That is also valuable feedback. Currency pair Australian dollar to US dollar. I see a good entry point. Look at what is happening here. Switching to the 1 minute time frame. The oscillator has not yet given a signal. The line has not crossed down from the overbought zone. But do you remember what I told you? Oscillators always lag a little behind. On this chart, there are other strong signals worth paying attention to. We see a formation developing in the lower part of this triangle. We can also draw a trend line along the peaks at the top. We are already at the peak of this movement, so we can consider a sell trade from this upper point. Additionally, I would include a resistance level here. It is not a fully formed level since the price has only been at this point once. But considering the strong buying impulse that quickly reversed, we can still see this as a potential reversal zone. That means we have a double confirmation for a reversal. Plus, the stochastic shows that we are at a very high overbought level. Taking all these factors into account, we can assume with high probability that the price will reverse here. Over 2 minutes, the decline is small, but we can see that after the uptrend, a doji candle formed, and now the price is gradually moving down. I'm sure you have seen how the same setups repeat on the charts. The best results come from combining strategies. First, analyzing the chart and then using indicators to confirm signals. That is exactly what we have done today. A fantastic trading session. And as you can see, everything is very simple. All you need is the right tools, the right guidance, and a supportive community. That is exactly what you will find in my pro group. I believe that being part of my trading community brings great benefits. Every trader in my group has direct access to me. I'm always there to answer questions. We have daily trading sessions. I analyze the market, study the news. Click the link in the description, send me a message on Telegram, and become part of our community. Thank you for watching this video. Do not forget to subscribe and turn on notifications so you do not miss valuable content like this. See you soon and good luck with your trading.